So last week, obviously, the material uptick in realized has got realized back into the 60s. We approach, obviously, the final deadline. The flash crash, we dropped about 6% plus, probably 10% intraday last week. And then obviously we rallied about 6-7% yesterday. So those are the big moves that are driving that uptick in realized vol. A lot of leverage longs getting liquidated on the down move last week on rumors of an SEC rejection. But obviously you saw what happened next. Implied vols have been trading higher with realized. So realized is the yellow line here, which obviously been rising, but implieds have gone up as well. Carry was a lot more positive this time last week. Still positive carry, but not quite as much, just because realized has had the uptick as well. So that's closing the gap. But we would anticipate implies to come a whole lot lower post the event at some point and get back into the 60s at least, certainly in the weeklies. Obviously, the monthly vol hasn't done that much. You can see the white line is pretty flat week on week. White line is the 30-day vol. So that's not really the thing that's going crazy. So you're seeing weekly vol go up because they're just not letting it decay. So that's what tends to happen with events. The theta that the options are supposed to experience never actually materializes. And the only way that can happen, because your time is shrinking, because you can't stop the passage of time, you can't hit the pause button on time. So as an option goes from a 2-week option to a 1-week option, but the option market doesn't let the option drop in price, then all that theoretical theta gets repriced into the implied vol number, and the implied vol number just goes up. And that's exactly what we're seeing. We're just seeing no drop in option prices over the last week or so that the premiums stay the same. Once the event passes, then that implied drops back to the level that it would normally be. Let's assume something like 60 vol, and then you will see a big drop in option prices from that move. Now, obviously, there may be a gap in spot. So those option prices, you might still make money being long those options if you own them, because the gap in spot might be big enough. Personally, whilst I think there will be a lot of choppiness, I don't think the gap in spot needs to be that big between now and next week, because I don't actually think the Bitcoin ETF approval is new news. Everyone's expecting it. Everyone thinks it's going to happen. So if it happens, why do we need to trade at a different level, really? Unless there are ridiculous amount of inflows that come in and it's just forced BTC buying that pushes spot prices up. Doubtful, in my opinion. Let's see how it plays out. Okay, and then the fact that we also got a 6% rally yesterday, and we were pricing an 8% implied move at the start of the week, based on my calcs, you've already done a lot of that move as well. So even more reason why I think we're going to struggle to materially move higher. Obviously, if they rejected it and we didn't get the approval for the ETF, we're going to get an immediate drop of 15% plus, right? But that is not anyone's base case. Okay, that's what I'm seeing in realized. Going over to term structure, we're seeing obviously an inverted term structure. No big surprise there if you know what that is. So you've got 80 vol in the front, down to about 60 vol at the back. As I said, weekly options refusing to decay. We did see about a 1 to 3 vol down move in the rest of the curve as traders. Any traders that own short dated vol, even directionally or whatever, they know there's a vol reset coming. So whilst they might want the gamma and the leverage to the options that they own, it's a smart move to sell some longer dated Vega against it, because that will probably come down as well. So you'll probably get a shift lower in the whole curve, and it'll go to something like it was a month ago. Maybe not as dramatic as that, but that's the sort of shape it would go. And that selling those longer dated things against your short dated is going to protect you from that vol reset. Now, the parts of the curve that I think is going to get hit the hardest outside of the weeklies are clearly going to be February and March. Reason being, they don't contain the halving. The halving is likely to happen in April, and therefore you might start to get that kink that we saw for this event. You might start to get a kink appear in the kind of April bucket, which I guess is going to be something like between 60 and 90 days. So you get some sort of hump appear here where we collapse and then we hold a bit of a bid in that halving bucket, right? But the problem is the halving's not really even though it is an instantaneous event that occurs, in terms of how it impacts the price of ETF of Bitcoin, it might not be an instantaneous impact. Like in the past, it's never been on the day of the halving we get this massive move. It just tends to be that once the halving happens, that has basically taken a load of supply out of the game, because the miners do not get given as much Bitcoin, therefore they can't supply as much Bitcoin to the street as they were, and you start to see just a drift higher on the back of that. And that's what we need to look out for, basically. So I don't think it's going to be a knee-jerk thing. Therefore, it may not come in as a vol event on the vol curve. ETH term structure, also in backwardation, not quite as extreme as Bitcoin. Similar story, seeing sort of Jan to March getting offered, but the back end of the curve actually holding up much better, which is interesting. That's at 68 vol relative to 61 or 2. So it's trading at about 7 vol premium to Bitcoin long end, which is about as expensive as it's been in a long time. We can see that here on the next page on the relative value, right? You can see the front end obviously is in a Bitcoin premium by about 3 vol points because all the excitement's around Bitcoin. But look what it does in the back end. It's 7 vols for Ethereum premium. Realized vol on a 30-day basis around 6. That's quite well priced. But realized on a 10-day basis, it's obviously just gone in favor of Bitcoin at like -1. So it's kind of the front end is reflecting realized right now in the 10-day, and the back end is reflecting slightly longer dated realized. So it's actually really well priced right now. You can see here on the long dated chart, not that long dated, 6-month chart, that this is about as high as we've seen the 3-month spread. Whereas the weekly spread, obviously sitting there sub-zero, was spending a lot of time there last year as Bitcoin was the main driver. Now, the Ethereum Bitcoin spot spread has dropped below that key 0.05 support. I had said last week we might get a knee-jerk move down in that spread if Bitcoin has a pop. That's already happened even before the official news. So if you were waiting for that knee-jerk move to get into Ethereum versus Bitcoin to play the longer-term story that I think is going to take hold later on this year about Ethereum, then now's a beautiful opportunity to do that, right? So there's your chance. We told you wait for it, and now is as good a time as any to be getting into those trades. How would you get into those trades? You could still do the call switches. They don't look as good as they did because the vol spread's no longer at flat. Like we said, the vol spread's trading at 6 or 7 vols over. So there may be alternative ways you could get into this spread using options. You could just do it in spot. But an option way of doing it may be to do a bullish risk reversal or a call spread on Ethereum to get your long delta on Ethereum, and then you could sell Bitcoin out of the money calls to June or something like that, where you can still get a decent premium. You can sell something like the 90,000 calls on Bitcoin and get over $1,000 for that, right? And you can use that premium to fund any long positions you want on Ethereum, and that's so far out of the money that I think it's fairly unlikely to get you into trouble on the Bitcoin short leg. And you've got plenty of upside if Ethereum does decide to reprice higher, which we anticipate it will at some point. But then you don't pile into a load of long Vega and just get hurt by the vol reset. If all the vols go down, or if the vol spread converges down towards flat, you'd get hurt in a call switch. If you do it the way I'm suggesting here, you'll be net short vol. If you're net short vol and vols reset lower, you're actually going to make money even if the spot doesn't move in your favor. So that would be how I would probably structure any new trades going in for that relative value. Okay, then jumping over lastly to SKEW on the vol analysis, we can see that the SKEW term structure is having interesting moves as well. Weekly SKEW has flipped back into put premium. Hedging demand has come in. It hasn't gone too far though, because a lot of the hedging demand is in the form of put spreads. With vol levels, outright vol levels so high, people generally don't want to buy outright options anyway, so they often do spreads, and that stops the SKEW from going crazy. But we are definitely seeing it move away from calls and towards puts. The rest of the curve, however, is still in call premium. The back end is as rich as 5 vols, and that's across both Bitcoin and Ethereum. Ethereum calls are still very well bid, just because of that narrative that we expect later this year. The sign that Ethereum, the fact that Ethereum puts, however, the weekly puts are trading a bit more expensive than Bitcoin. So Bitcoin puts are kind of near flat. ETH puts in the weekly is a kind of 1 to 2 vol premium. We think that's just after the liquidation event that occurred last week. You saw Ethereum drop quite significantly. So I was saying in the call last week that I thought Bitcoin might drop, but Ethereum might ignore the drop because it might be Bitcoin specific. That was not what happened at all. We saw Ethereum drop more than Bitcoin on that liquidation move. So that shows you that Ethereum has got very high correlation in any Bitcoin downside, and it's not going to be left behind. So it will probably trade on a higher beta than Bitcoin on the downside as well, right? So that's certainly what the option market seems to think, because we have seen that skew on the put side go quite well bid on ETH as well. And then short-term overwriting on the screens coming back a little bit, also helping the call skew evaporate in the front end on ETH, even though it remains in the back end. Overwriters aren't selling long-term calls, they're selling short-dated calls so they can earn their theta quickly. That's a systematic carry harvesting strategy, and they're going to do that in the short end. Okay, the long-term vol premium, the positive call skew makes call spreads the efficient way to play long-term bullish bets on Ethereum. And we already said, low-cost bullish risk reversals are also a way to do that, because whilst that call premium is 5 vols, as we've seen in Bitcoin for the whole of last year, long-term call premium can go 10 vols plus. So it's not as expensive as it can be. So you could still keep your costs down, do a bullish risk reversal, own that upside on Ethereum, because if Ethereum starts to get going through 3,000, that whole space is going to catch a bid, and those upsides are going to do quite well, both from a Delta and a Vega perspective. And so I wouldn't necessarily mind buying the call premium on the long end. I think the short end is more risky because of the theta associated with it. But when there's not a lot of theta and it's mainly Vega risk, I think you'll be all right owning some Ethereum way out of the money upside, June expiry and longer, basically. Okay, so that is my little vol spiel for this week. The dashboard clearly off the chart in terms of saying sell Bitcoin upside. That obviously it's a mean reversion model, so it would be screaming that, but I happen to agree with it right now. And so, I do think that is probably the optimal trade if you've got the stomach and the risk for it. Ethereum, not quite as convincing in terms of selling calls. So it is still up there. But yeah, if you're going to sell any calls, really, I think it makes more sense to sell them in Bitcoin. And then if we look at the flow side of stuff, volumes on Bitcoin up about 45%, with spot swinging around like an animal. Protection buying, once again, focused on the very short end, 12th of Jan to 19th of Jan expiries, to hedge the event risk, obviously. Lots of call activity that we've highlighted here, a whole host of different strategies. Directional wise, there are some March call spreads being bought on the 45k, 60k strikes. But then you've had the big strikes that are trading are the 50k strikes and the 60k strikes. And there's all sorts of calendars being traded, long, short, you name it. People trying to keep their Vega risk relatively contained, not buy a load of vol before the event, because the odds are the vol's going to reset lower. So people using calendar structures and things like that to do that, but also rolling some exposures up and out, like how I often do. And I've actually done that. We'll talk about that soon. But when you've been long calls and they've worked and they're getting a bit short dated now, you want to roll them up and out to take profit. That's a good systematic profit taking strategy when you are long options to express the directional view. Okay, that is your Bitcoin flows. Ethereum flows dropped, volumes dropping 35%. Obviously, all the focus on Bitcoin this week. The big strike, though, that stands out is the 2,500 strike. That's the most active. Outright calls being bought out to Jan. Call calendars being bought generally, Feb March and March June. Same line, 2,400. And protection buying flows from kind of 2,200 all the way down to around 1,900 on Ethereum. But like I said, put spreads also being bought on screen and things like that. Okay, so that is your Ethereum flow. In terms of gamma positioning, not the most exciting as we've ever seen it. So pretty neutral gamma positioning on Bitcoin right now. Obviously, it spent a lot of time last year short gamma. This is about as neutral as it gets. If you look at the makeup of it, we've got short strikes in the 45k and lower. We've got a big dominant call strike, long strike here on the 50k strike. So if we did rally, we'd probably move towards a long gamma territory, which would make it harder for spot to rally that much. So it act as a bit of a cool wall resistance, as we talk about on the S&P a lot, for those of you who follow our macro products. If we went down, all these protection that's been bought here has actually got the dealers a little bit short out to Jan, 12th of Jan and 26th of Jan. Actually, that could exacerbate a down move. So if we were to get the thing no one expects, which is a rejection, this short gamma down here could create an overshoot that could take us to 30 38K or something like that momentarily, right? I don't think it necessarily stays there, but certainly the gamma positioning could play a part in getting us down there. Ethereum, on the other hand, still small positive gamma, long around the 24 area, short around the 25 area, pretty balanced here right now. But what it says is if we got a rally in Ethereum, actually the street would get taken shorter. And that's the opposite of what you're seeing in Bitcoin. So most of last year, when we saw breakouts to the upside, we saw Bitcoin driving it because dealers were short gamma there and they were long gamma on Ethereum through the overwriting flows. Right now, the condition is completely flipped the other way around, where dealers are long from all the call spreads that have been bought and they're long the 50K strike. That's going to stop the market going too crazy in Bitcoin, but Ethereum's got nothing getting in its way right now. So if the whole crypto market wants to rally post the news, then Ethereum actually could have some legs on the rally, and that's just something to be aware of. Now, remember, these gamma positions are probably not big enough to actually have that big an impact on the spot crypto market right here, right now, because what's going on in spot is quite big right now, and that's probably overwhelming any of the option flows. But it's just good to be aware of what the option flows are and which way round they are, because if you do start to see the price action behaving that way, at least then you understand why it is, because of this difference in nature between what the dealers have got on Bitcoin and what the dealers have got on Ethereum. I mean, it definitely had an impact on Ethereum realized vol last year. So I think it's probably more impactful on Ethereum just because that's probably not as deep a market in terms of spot. That's the summary for this week in crypto. Thanks a lot. As always, I'll catch you guys later.